What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about whether TLT and TMF are still worth buying in 2024. So that is going to be the complete analysis. In this video, we're going to take a look at the fixed income market, the bond market, to better understand whether it is finally time, or basically whether there is a trade opportunity in the bond market once again. There was a survey that was done by Reuters, which I'm going to break down, and I'm going to share my thoughts and my views on where the yields are headed next, because that's really what's going to dictate where the markets goes next. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. Opened up a couple more spots in 2024 in January if you want to take advantage of that 16% annual discount. And I also want to take a minute to really appreciate each and every one of you for being part of this amazing journey that we have had on YouTube over the years. I did get my YouTube in review 2023 entire recap, and I wanted to basically go over and appreciate each and every one of you guys for being a part of this amazing community. We achieved over 46, almost 47 million impressions in 2023. We added new 4,300 MoneyVest subscribers. So I really do appreciate each and every one of you and welcome you to a part of our growing community. And of course, watch time. You guys spent 437,000 hours watching my videos, and if you kind of convert that, so 437,000 divided by 24, that is a good 18,200 days spent watching my videos, divided by 365. That is almost 50 years. 50 years you guys spent together collectively watching my content. Come on, guys, get a life. And this right here is the number of views, over 4 million views. Thank you so much again for being a part of our MoneyVest community. It's really your support and you showing up every day, dropping the like, and we had over a 250,000 likes and 18,000 comments in 2023. It's really just you guys that make it possible each and every day, and I really hope and pray that I continue to offer a lot of valuable content, and I really do continue to offer a lot of insightful analysis and continue to provide you guys with some very high quality content, including stock analysis, fundamentals, technicals. If you have any questions, I'm always available, and you can always come to me. You know, even as a friend, I consider and I want what's best for you. That's why I would never sort of force my strategies or force anything on you. It's really your decision at the end of the day, and I want what's best for you as well. So you can always reach out to me via email, messages, Discord, whatever it is, and I will always make sure that I'm giving you the best possible analysis and insights that's in the best interest of you. So going over to this right here is going to be the rate cuts. So as we have already talked about, when it comes to the interest rates themselves, they have stabilized. More or less, they have somewhat stabilized a little bit at around 4%. So that's where the 10-year treasuries are at the moment. And in my previous videos, you know, we talked about how there is going to be a very specific reason as to for the Federal Reserve to start cutting interest rates, right? They need an incentive for them to finally make a decision to pivot and start cutting interest rates. So as you'll notice that we, of course, peaked at just over 5% for interest rates, right? So we were a little bit over 5% back in October. We talked about this in our Discord as well, that interest rates are most likely starting to kind of peak out a little bit. That's going to result in a little bit of a pullback if there is some momentum back into the bond market. That's exactly one of the reasons why I started to go in a little bit more heavy on TLT and TMF. And since then, of course, they have done really well because TMF rallied over 60 to 70% from those October lows. So this right here was the entire rally, 75%, and TLT also up over 30 to 40%, pushing up very well from $80, $81 back up to this lower high almost perfectly. I mean, this is literally picture perfect how it kind of tapped out at this resistance and then started to roll right back down. Now, the question is it finally time to be looking at buying TLT, TMF, buying bonds once again? So that is the real question that I'm going to break down in this video. Now, first things first, the market's already pricing in a lot of rate cuts. We know that the market's pricing in at least 6 to 7 rate cuts that is going to take the interest rates down to 3.75 to 4%, sub 4%. That's going to be about 6 to 7 rate cuts. And of course, we are looking at least 150 to as much as 175 basis points worth of cuts is what the market is expecting from the Federal Reserve. Whether that happens or not, of course, time will tell us, but that's really what the market's expectations are. Now, the treasury yields to only start falling in the second half of 2024. So there was a poll done by Reuters, and that was done for 62 bond strategists that they expect that yields should keep around 4.1% in the 3 months time in the first quarter, although the forecast is trimmed from the previous poll in December by about 15 basis points. And this right here, HSBC's global head of fixed income research, Stephen Major, argues that our forecast is for yields to remain unchanged in the first 3 months. And while that may sound really boring, that's how bonds work. I feel very strongly the next big move in yields is downwards and will come in the second half of the year because markets are in need to see actual moves from the central bank rather than working on pure expectations. And that's exactly true. We need to see from the Federal Reserve that rate cuts are indeed a reality, not just expectations, but a reality. And what's that? What is it going to take for this to actually be a reality? Here's the playbook. Here's what I want you guys to remember always. This is going to be the playbook from the Federal Reserve, and this is what's going to create that reality and not just an expectation. So rate cuts will happen from the Federal Reserve if there is a slight increase in jobless claims or unemployed persons, or there is a contraction in the GDP, because these are signals, these are early signals and indicators that the economy is weakening. There is a softening in the labor market and there is economic contraction. The economy is starting to weaken. Or there is core inflation that is now coming down. We've got inflation numbers coming out tomorrow, so we'll take a look at those. But core inflation is sub 2%. There is some type of a crisis that the Federal Reserve or the central bank needs to solve, or there is a political pressure that's coming in because it's going to be a very, very politically polarizing year in a 2024. So that, of course, is also something to keep in mind. So any type of bad economic data, in other words, could be a good market catalyst because that kind of reaffirms the possibility the Federal Reserve is going to cut rates. Any type of great economic data is obviously not going to be the best market catalyst because that reaffirms or sort of reiterates the idea the Federal Reserve could keep interest rates higher. And at the end of the day, Powell and the FOMC are going to continue to punish the economy for being strong. They're going to punish, in other words, they're going to make it more difficult and more challenging for stocks to rally by keeping interest rates higher if the economy and the labor market continues to be strong and inflation continues to be a little bit more elevated. So really, it's all going to come down to where inflation goes. So of course, we've got tomorrow to look forward to when it comes to inflation numbers and whether we're going to continue to see some expectation lower from CPI. And this right here is going to be the Reuters poll, the US Treasury yield forecast, and they're really expecting that the forecasted scenario in the third and fourth quarter of 2024 is when they really expect for the yields for the 10-year treasuries to come down further and of course be sub 4%, so closer to 3.75 or 3.5%. That is really what's the expectation from the of course the Reuters poll, and more importantly, they're expecting the yield curve inversion or the spread to turn back positive in the second half of 2024 between the 2-year and the 10-year yield spread. Of course, we've seen the longest time that it's actually spent in this negative territory, but eventually they're expecting sometime this year for that spread to turn positive and for the yield curve to uninvert. So where does that leave us when it comes to whether TLT, TMF are still worth buying, whether the bond trade is still valid? So here's the thing. If you come back over to the 10-year treasuries, we identified a level where we basically noticed that, okay, 4.09 to 4.1% is a potential resistance, is a level that it actually could bounce back up to because it was so oversold and TLT and TMF have rallied so much that there was a possibility that we do see a little bit of rebound. I mentioned this in our Discord as well. And guess what happened once we got up to that 4.1% level? We're starting to show some signs of that weakness once again. So if inflation numbers play along, if we actually do get some very good inflation numbers tomorrow and in the reports that follow in the next couple of months, if inflation continues to trend lower, that's going to reiterate that possibility that the Federal Reserve can indeed and will indeed cut rates in line with expectations from the market. And that, of course, is going to create some more potential downside. Now, the downside I have for the 10-year yields in the course of 2024 is 3.25. That's my target if everything plays out according to the plan. If everything works out, I expect and see for the 10-year treasuries to settle in at around 3.25%. That's going to be about an 18 basis point or 18% and 73 basis point drop on the 10-year treasuries, which is obviously going to create a significant push for equities and, more importantly, TLT and TMF. Now, the reasons, I want to highlight some reasons why this may not happen. because of course, this is not a prediction, but this is an expectation that, okay, if everything goes according to plan, if inflation number continues to trend down, and we're seeing a very strong economic report, very strong labor market, and there is maybe some softening in the labor market along with inflation coming down, that is the best scenario for the Federal Reserve to start cutting rates, because not only inflation's coming down, there is some weakness in the labor market as well. That's going to be more encouraging for the Federal Reserve to once again start increasing interest rates. Start cutting interest rates. So that is going to be very, very important. Now, the reasons why this may not happen is if inflation stays elevated. If inflation stays elevated or above the Fed's target, and economic growth continues to be super strong, we have not seen any weakness in the labor market, and the jobs market continues to be super strong, well, in that scenario, there is a possibility that yields somewhat stabilize in this range. So this right here is what I want to mark out, and that is going to be in yellow. And this is the range where I could see the 10-year treasuries and the yields in general stabilize, right? Stabilize meaning that they kind of sit somewhere between 3.9 to as much as 4.2. So that 30 to 40 basis point range, that's where they continue to sit, as we have already seen the 10-year treasuries kind of in that level, in that range, but since December. So they can kind of sit at those levels, continue to be at those levels if the Federal Reserve's not kind of playing along with the market's expectations. They kind of cut rates, but not as much because inflation is still pretty elevated. Jobs market is not showing any signs of weakness, so they can kind of stabilize over here. For any reason, if inflation starts to kind of break out of control, once again, if you start seeing some reacceleration, which I don't see happening anytime soon, I don't expect inflation to go crazy again. Only in that scenario, of course, there's a possibility that we recover back up to over 5%, which, like I said, is a very, very low probable outcome. So, in my opinion, there is a trade opportunity in TLT and TMF in 2024. There is potential for more upside, as I do expect the 10-year yields to maybe drop further, but that again hinges on the idea that inflation plays along. There is maybe some softening in the labor market, which kind of encourages the Federal Reserve to cut rates once again and more. And that can create some more downward pressure on yields because of that panic buying from capital allocators, along with that push in TLT and TMF back to potentially trading up to 120s, 130s, and TMF to, of course, back almost at $100 once again. So 60 and, of course, $70 to $80 per share is going to be those levels. So that's going to be my expectation. Let me know your thoughts down in the comment section below. Of course, inflation and interest rates are the key drivers for this bond trade, and this is exactly what we were planning last year. I got out with a nice 40% profit. I may reload this trade, but, of course, after understanding the entire tactical scenario, the macro scenario, when it comes to the overall interest rates and inflation in the markets as well. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, once again, thank you so much for an amazing 2023. Link to our Discord and Patreon is going to be down below. We'd love to have you on board if you want to join and, again, be a part of our Money Invest community. And as always, happy investing. I'll see you all in the next video.